I think the silver wave may be in play for a couple years, and then it's going to move on to a different metal. Okay. And then anything that's utility grade is going to go to sodium because even though it's not as efficient, it's dirt cheap. Okay. And everybody knows what a sodium acid, versus lithium. Sodium is just seawater. That's going to be utility grade. And I think you'll move on to aluminum from silver at some point too.
Good afternoon, everyone. Thanks for joining us once again this month. Exciting times all around us. Bob Kudla joining me. Remember that. TradeWell2030.com. We wanted to talk about silver, gold, copper, Bitcoin. Are they going to reach record highs again? How about the tariffs? I mean, does it even matter? They're just passing the cost on to us, and you've seen everybody's cost of living rise. So, I mean, what are these going to happen with the tariffs moving forward and how much more our lives are going to cost? And then what's going to break out truly? You're looking at everything kind of descending for a moment, but what's going to pop out by the end of the year as we enter into a new 4-year cycle? Those of you following the crypto know we're getting closer to the halve again after 2026, those last couple of years. And where does it go from here? Everything in life seems to be getting, even though it seems stable and static on every other thing in the world, prices just keep going up and up. So how do you keep up with that change and have enough funds to be able to continue to pay these higher and higher prices? That's the question. So here to talk about it today, Bob Kudla. Thanks for joining me. And let's get into it. A lot of people waiting. Their fingers are just, well, what are the answers, Bob?
Yeah, I have a totally different view. I think we've probably seen the tops of inflation, and we're probably on the cusp of a deflationary wave. And I'll give you my reasons for it. Number one is China's already in a deflationary collapse. They're producing way too many goods, for number one, their economies to absorb, and they're desperately trying to push out as much of those goods out onto the world market as possible, which then suppresses prices around the world. Even if it doesn't directly affect the country, it'll affect the country because they may be exporting the same products into those markets, and it weakens those companies. So China's number one on that list. It doesn't change. China is they don't have a domestic market, and so they're just going to do everything they can to push product out the door until their companies can't cover fixed costs, and then they'll shut down. Number two is everybody knows this AI wave is real, and what it's going to affect is really the meat of the American economy. You're talking mid-level white-collar jobs are going away. Organizations are going to pancake, and they're going to get wider. And we've seen it. I have customers that had multiple manager direct reports underneath them, and then the people reporting to them all got pancaked up to that person. And now they have a wider scope, and they have what they call AI agents to assist in the management function. I have another friend who has a company that he's an executive to, that basically when you come into work in the morning, and if you're in sales, typically, you get your call list out, you come to your desk, you sit down, and those calls are just waiting for you. And they measure, how long you were on the call, how many calls you were on, whether you got the appointment, whether you got the deal. It listens to you. It makes suggestions to you as to how to improve the call next time. It provides data up front on the person who you're calling so that you can understand who they are. And what that means is in the past, you may need 5 or 6 salespeople to make the company number. That could be skinny down to 3 or 4 now. And that's going to go across the whole entire United States. And what that's going to do is just going to drive out these $100,000 a year jobs are going away. And so the follow on to that is that the United States economy is the most vibrant in the world, But it's vibrant for two reasons. One is that we produce excess cash to what we need to live on. And number two, we have a robust service economy. Well, most of the services are what I would call non-essential. Gym memberships, getting your hair done, going on vacation, coaching for your little leaguer, right? All those things. When you start losing that excess capacity to spend, those jobs go away. And that's almost 30% of our GDP. And so you're just going to see companies, and this is restaurants too, right? Going out to eat. So you're going to see this squeeze in, before whatever the next wave of efficiency and productivity produces the new wave of entrepreneurs. So what I'm telling everybody here is that be careful. Okay. So, you have silver and gold, copper, energy, all of them have been pumping hard. And, I made a statement to my clients last week. I said, hey, I seriously doubt gold and silver will make newer highs than they already made. Okay. I'm confident that the AI boom, the tech bubble has broke. Okay. And so the only thing really left to push higher is in the energy space, because we haven't produced enough of it and there's geopolitical turmoil. So what I've been inching people towards is saying, hey, take a look at the buy signals on energy and make sure that you have a good size portfolio in US Treasury bonds, because that's where it's coming. And so that's what I think is going to happen. And you'll start seeing it. I know, we hear and see things about prices going up, but actually, rents have been falling. Okay. And, Trump's rolling out the thing with prescription drugs, and you're going to see wages falling. And I think you're just going to see a general destruction of price increases going forward. We'll have negative CPI prints in the next 12 months.
Wow, well, that's a big statement. And then just to come roll back to the UBI, you mentioned mid-level types of management, white collar. Like on a UBI basis, what do you think they'd be satisfied with without working to be able to get what, 6,000 a month, 7,000 a month? But then somebody who was, say, working at a lower level entry position, are they going to get the same 6,000, 7,000 a month for universal basic income, or is there going to be a stratified UBI based on what your previous type of management levels were?
UBI is communism. Okay, it's just packaged communism. There's no way human nature is going to allow me to get more than you. Okay, people will be screaming. Okay, that why does this person get more than I get? And remember, UBI is going to be rolled out on the young before the old, right? So everybody's going to be screaming. There's not going to be enough money. People don't. UBI is such a failed policy. You can't have UBI. The problem with UBI is that the prices of the have to have goods just rise to spend it all, right? You have health, food, rent, and energy. The four horsemen of have to spends. Those prices all rise with your income. Okay, if everybody has the same income, they're going to have to then say, well, you can't raise rent or you can't raise food prices. Well, that's communism. That's what communism does. And that's where we're going to end up. This whole notion that you're going to get money, you don't have to work is stupid. You have to produce more goods than the money supply, if you want to have people to have higher standards of living. If not, we're just going to collapse into despondency. So whenever I hear this, I cringe. It's not going to happen.
Yeah, because they keep trying to push this as the solution for all of the unemployment coming through AI. And when I hear government funded, that's not government funded; it's taxpayer funded. Because the last time I looked, they'd sell debt or scrape taxes from us to push out these government funded programs. It's all taxpayer funded. And I would like to get your thought on this, where you talked about bonds, treasury bonds, that moving over into the stablecoin issuance, where Tether has to, every time they They have to have something backing when they mint out these tokens. So I would say artificial need for treasury bonds seems like it's going to go through the roof, especially with finally the Genius Act, Stability Act, all these things taking form here. So how's that going to drive the demand for treasury bills if there's truly a stablecoin issuance going on, act that's solidified, that shows what is truly allowed from prediction markets all the way through stable coins? Are they going to have any interest associated with them? Can you get another coin to swap to trade to get interest off of holding something? All this will finally be, written into law. So where does this get? Because all I'm seeing is, they confiscated gold in 33, revalued it. I'm looking at the same thing where they're going to possibly force people into stable coins and then drive that artificial demand for U.S. treasuries. And then at some point in the future, write that debt down. And then again, the bag holder will be the American public.
No doubt that stable coins are absorb treasury issuances. And so the other thing too with gold is that they can reprice gold and that becomes cash available to the treasury. So I think we'll see that at some point too. That's why they're not going to try to cap gold as much as they can, is that they can convert the value of gold from when they did it last time to today. And now you're looking at there's probably $1 trillion of repricing there that can go into the treasury. So yeah, you're not wrong there. That's what's going to happen. Look, I don't know how much choice we have. I mean, with everybody retiring and everybody absorbing entitlements, it's not going to, those won't change until there's more people that aren't getting it than are getting it. And they vote in means testing. The other thing they're messing around with, they're trying to mess around with non-realized gains too. That's another recipe for communism, because all it does is destroy the value of the asset, because most people will have to sell the asset to pay the tax, and you start a downhill spiral. Those things only help China, because then those investors from overseas can just come in and buy our stuff on the cheap. So that probably won't go anywhere there. Netherlands is trying to vote it in. I mean, it's just like suicide pact for the Netherlands. I like to see somebody try it so people could see what it actually looks like. California just whispered it and they lost half their billionaires. Okay. Just whispered it. $1 trillion of assets, taxable assets, have left the state of California since the knuckleheads tried to send a trial balloon up there on it. And they tried to do a trial balloon on mileage tax too, versus gas tax. And people just screamed, and that got put on the shelf. So we're really at a detente here. They want to keep raising rates, but you're trying to raise taxes in an environment where there's no blood left in the stone.
Yeah, now swinging back, you spoke about just electric vehicles and thing. Now swinging back on that, I was looking at some silver, and they were saying 235 million physical ounce deficit this year compared to demand, and then the last 5 years have been running something similar. So at what point do we really hit this point where there's not enough physical silver to satiate the demand of all the manufacturers that need it now for literally every product, even these cheap LED lights or cameras and all these things that are going up? Not just the flock system, but any kind of home devices. They all need a tiny bit of silver. Every electronic device, the new phones, the computers, everything that we use now requires some sort of silver in it. So where's this finally that magic mark gonna cross over, where there literally is not enough physical out there any longer because mines are pumping it full? Who knows what the disruptions down in Mexico now with what's going on down there. So I'm just wondering if there is a magic number where we do roll over that and then it becomes unobtainium, where they have to really pay anything to get it back and wrestle it free from the fingers of those who hold it.
Yeah, I think we're getting to that point, because when companies that are the manufacturer of the material goes direct to the supplier and bypasses the futures market, we're close. So Samsung and I think Hynix in Korea are going directly to the Mexican mines for silver. So the next step after that is, somebody like Elon Musk just goes ahead and buys a mine. And I think that's when the end is there, when they just say, you know what, I'm going to vertically integrate. I'm going to buy the mine, okay, that produces the metal that I want. And I think that's when we're going to go to peak. Interesting thing about silver is that battery technology, has been moving around, and the next area is really aluminum. Okay,
Mm.
so and aluminum is uber abundant and it's easily to recycle. So I think the silver wave may be in play for a couple years, and then it's going to move on to a different metal. Okay, and then anything that's utility grade is going to go to sodium because even though it's not as efficient, it's dirt cheap. Okay, and everybody knows what a sodium acid, versus lithium. Sodium is just seawater. Okay, I could take a bucket of seawater and put an anode and a cathode on either side of it and get a current. Okay, so you're going to look at sodium ion batteries that are just dirt cheap, and they're super stable. And I wouldn't be surprised if those are the sodium ion batteries in the next 10 or 15 years. They'll be sitting next to your house, okay? Collecting, being a capacitor for the overnight cheaper energy production. But that's gonna be utility grade, and then I think you'll move on to aluminum from silver at some point too. Copper is interesting to me because until the AI boom busts, they're going to have to upgrade the grids, and there's not enough copper. And so, I already have some FCX. It's a copper gold company, and I think it's going to do well over time. It broke through 60, and that was a magical number to me for it to get to 120, and now it's hovering around 65.
So what do you think about the disruption? And it doesn't matter what metal, because Mexico is a massive producer of so many of the metals that we consider critical. So with the cartels controlling nearly every zone across Mexico where all the mining was, I was looking at least 15 major silver mines being completely closed off right now. Now it's going to disrupt some, but how long will the disruption go and really send a ripple through the market enough to where people will start, I wouldn't say panicking, just like the realization moment would hit, like, we're too reliant on certain sources. This is going to cause a problem here.
I don't know. I mean, it's already calmed down quite a bit. So, remember, these cartels probably have interest in those mines already, so they're not going to cut their own nose, right? I would think that would probably calm down over time. I think the bigger worry for the cartels is that Trump essentially took out the number one guy, narco in the world. He just put everybody else on notice. If I can get this guy, I get you. You know what I mean? And so I don't believe anything around it that was a Mexican operation. They might have been wearing Mexican Navy SEAL uniforms, but they were speaking gringo. Okay. And you don't take a guy out like that without probably Delta Force sitting right in the middle of that stuff. That was a big deal too, because that guy was pretty bad news.
Yeah. So the reason I was trying to trend into this, you're talking about breakouts just previously before we got on the interview here about, what was going to be breaking out. So that was my thing, is looking at, okay, well, there's a short-term event that's going to cause a breakout possibly. I'm wondering what you think is going to break out during this time based on, it doesn't have to be this specific Mexican event going on here for silver, but
I think copper's
going
to break out next. Silver already broke out. Silver has to prove that it can make a new high right now. Okay. See, the longer it takes silver to make a new high, the more likely it is silver won't make a new high. Okay. So that's just the way it goes. Let's see. Then it gets kind of stuck. So silver's high was at like 140 or something like that. Some crazy, whatever, 123, and it's at $86. So, and it's already been almost a month. Usually when you're going to make a new high, you should already made a new high from that high. So to me, this looks what I call a busted parabola. And so it has to now make a new high. If not, it's going to roll over. And then what happens is you get what's called the Eiffel Tower effect. And then basically silver will retrace 87% of that move higher. So it would bring it back down probably to $55 or $60. Those are the ways just the math works, in these environments. Now, I'm not saying it won't happen, but right now my prediction is that it will fail to make a new high, and then we'll have a lower low from that low that it came in at, $64. We'll beat that down lower, and then we'll see what happens. Usually it goes flat for a while after that. It just blows people away because that's what everybody thinks, but that's what causes these parabolas to bust when everybody's leaning the same way in the boat.
I hit you with a question now. Chinese New Year, all the metals exchanges in China were closed for almost 10 days. And,
Yeah.
over here, you think that JP Morgan and organized alleged silver manipulators allegedly would smash the price down. So that did not happen or occur. Actually, silver increased in price as the full Chinese markets were closed, where there could have been the most of manipulation, allegedly, if they could. But I'm wondering why that didn't happen and why prices continue to rise on the very best possible times to allegedly manipulate silver if they could, and it didn't happen.
Yeah, it's called hope. I own a lot of silver, so I'm not bearish on silver per se. I'm just trying to regulate people's enthusiasm. Silver has to go up another 50%, all right, to recover the losses that it took last month. 50%. That's a big ask. Is that, look, I have most of my IRA is sitting in silver and gold, a mining company, so I'm rooting for it. It's just that you have to be a little bit myopic on this, not be myopic on this stuff and just, hope it happens. You have to hey, it failed. I told people to run trailing stops on gold and silver and miners, when this thing was rising, and a lot of people got out with only 12% losses. Okay. Then you can buy back in here and now you're catching a second wave. So people that were crypto bros on this thing and leveraged long, they lost everything. How a lot of people lose everything in a bull market. How do you do that? Because you don't practice good trade management. You have to be willing to walk away from something that could possibly go higher in order to protect you for tomorrow. And a lot of people don't do that, and they should.
Wise advice, Bob. Yeah, take those gains when you can, even if you think you could eke out a couple, 5 more percent, 10 more percent. If you're already up enough, then just call that an even and just thank the universe for those gains. And then if it does fall or it does increase, then I'll just find something else that I've done enough research on that I think would hit.
Yeah, what I tell people is do trailing stop. You can start with a wide trailing, like 25%, if you truly believe in it and you don't want to get stopped out, on a stop run, and then when you start, look, this thing, I'm looking at silver right now as we're talking. So I'm not being Helen Keller and being blind here. I'm looking at different charts. So silver broke over 3 standard deviations of a 6-month channel. Okay, that is a 95% chance it's going to go back to the trend line. That's why I told people, look, now you gotta aggressively manage this. When it pushes up like that, it doesn't stay that way. The other thing is when it goes vertical, it doesn't stay.
Never.
Okay. The reason why it's going vertical is because people who are shorting it are covering it. They're not new buyers. And what people make the mistake of is that you should be scaling out into these moves because you're going to get in at a lower price. And that's all. So that's what I'm saying. So look, copper needs to make a move yet, and energy still has to make a move yet. So there's places to play. And if you want to talk about the most stable one, is probably uranium, because they're still building nuke plants, and the fuel is such an insignificant part of the plant that people will buy it higher than they would normally like to, because for the amortization, it just doesn't matter.
What's uranium at? Pushing toward 100 now?
Yeah, I don't follow the price per se. I just own some uranium stocks in my IRA and just don't even look at them.
Yeah, and I want to say one thing, Bob, you have those charts with Trade Genius where it does show the deviation pattern going, whatever the trend is, either either up or down. But you can see when it breaks to the downside too, if it's 3 standard deviations downside too, it's definitely going to bounce up. But it's a good indicator where it's going to hit at the top, and then or where it's going to hit maybe at price maximum, and where it might flat out and then return back to some sort of baseline there at 0 again. But it's just a good indicator to see if it's too high on the pricing, like if it's way overbought or way oversold, way outside the ranges that it normally would be. And you got that whole chart pattern there that I dive into regularly when I'm looking at to see where it sits on the actual pricing compared to historical.
our algorithm actually it displays on the trading view chart. In fact, if you're a silver buyer on a daily, it told you to get back in at $77.39. And our target for this move is $92.31. But yeah, we put the target out there. We put the stop loss if we're wrong. And it's a really cool system. And you can get it, just go to Dave's landing page. We have two programs running. One if you want to be in the chat room, one if you want to be actually in a voice trading room and trade with us. And we do quite well. And because it's all map based, I don't rely on my own judgment. There are rules to trading, and if you follow them, you can't help but make money. And we think we have a pretty decent system that wins enough times, but most importantly, has what's called a positive profit factor, meaning you win more when you win versus you lose when you lose money. And that's how you build wealth over time.
Yeah, and a few strategies with that. Don't use leverage. Just whatever direction you're going, don't use leverage. Just be happy with what you get on
you
the
don't
gains there.
need to. You don't need to. You'll be surprised. If you made 1 or 2% a week, I think it gets lost on people. My average gain is 1.5% over 3 days, and we win 2 out of 3 trades. So so we're operating at a 60 to 80% annualized. And the only reason why that you're not 100% invested, so you have to kind of monitor that. But we have a customer that monitors all my trades versus the S&P 500, and we've doubled it. We're at, I think, 104% of the S&P 500, and we're higher than the tech, and we're higher than the small cap. So we know what we're doing is we're doing well, and that's looking back over the last 16 months of trading. When we had big moves in the indexes, we still beat it. I put them out. They go on notifications. It's up to you to take them or not.
TradeWith2030.com. You can check out more information there. See if this is something that would be of interest for you moving forward, because you're going to have to try to stay at pace, at least with the rising costs of everything. Now, it could go deflationary, as you said, eventually. But for right now, it does seem like prices are going to continue to trend up, because I just don't see things in the supermarket getting cheaper. And then one thing I do see is every single store needs now, to any kind of purchase, to ask you for your ID. They try to scan the back of your ID to get you in on. Now, this is just maybe an off topic here. To know at least where your zip code is, what your average house price is, and then this on-demand pricing when you go to shop online, or these new digital price tags that are in the stores, with the on-demand price structure that they're moving to, which is going through the courts now to see if it's legal to do such a thing and charge people a little bit extra based on rounding of the pennies currently, of that extra 4 cents, getting you closer to round up a penny, getting you on that price because they know you might not be able to afford it, or pulling you back way over where they can scalp 4 cents off every item that you're buying just based on the zip code you're living in, because they scan the back of your driver's license. They know where your house is and how much that is comparatively to within the counties or within the states, all based on algorithmic projections. That's where it goes. Now, what if we do away with the nickel? Then they get 10 cents of wiggle room. So, things are just getting more expensive as they trot around, and, prices keep going up. So you're going to have to keep pace with that. So whatever, legal means you can do that. And this is one of the greatest ones here. So, Bob, I appreciate your time. TradeWith2030.com. Bob, any last comments here?
Trump's playing rope-a-dope with Iran, hoping that they make a mistake. And because he doesn't want to be in a quagmire, right? And cause oil to spike. So we're going to see kind of how all that plays out.